trying to get into the swing of things. It's good that the weather is turning around.
Yeah, it's
It's,
beautiful.
yes, yes. And so get a chance to go back out there and get into the swing of things and be active and stop gaining weight.
Yeah.
Yes. Well, it's good to see you this week, this Thursday, and I want to welcome our audience to Thriving Thursday Live. And so we are glad for everyone that's coming on this evening, and we want to say hello and welcome. And so, if you haven't done so already, please go ahead and hit the like, share if you're on a social media platform, and also you want to subscribe and hit the notification so that you get notified anytime that we go live, so you don't miss any session at all. And I want you to continue to follow First Home Alliance on social media platforms and also check out our website for all upcoming events. And of course, we're looking forward to next month is Home Ownership Month. And so we want to talk a little bit about that. We're going to bleed a little bit of this reverse mortgage over there, some possibilities in reference to purchase of homes as well. Oh, before we get started, I want Charlene say hello to our audience.
All right, guys. Good evening. Again, thank you for joining us for our Thriving Thursday conversation as we continue the conversation from last week. But before we get into that, let me tell you a little bit about First Home Alliance, who we are, services we provide, where we provide the services, and how, if you stay tuned to the end of this conversation, that you can get more information to receive these services. So, First Home Alliance, we are a HUD-approved housing counseling agency established by Mr. Larry J. Laws in 2002. Mother purchased her first home at 65. He decided, all right, after he served his country, he was going to serve his community by keeping the dream going. So he started the nonprofit. Our mission is to increase home ownership to lower income moderate family, along with serving our veteran community. And let's stick that word sustainable, because that's real important these days, as we know. Sustainable home ownership to low to moderate income families. The services that we provide are pre-purchase counseling as well as education. The counseling, hey, I want to buy a house. I Googled it, and all I see is classes. So, which is good. All right. That education piece is really good. But First Home Alliance offers the counseling. We help you build a home buying team, which there is definitely a team that is needed in the transaction. So we help you build that, get to the finish line. That is the pre-purchase counseling. We also offer education. Education is our first-time homebuyers class that we have usually once a month in the Northern Virginia area. We also offer loss mitigation services. And loss mitigation services is I currently am a homeowner and I am experiencing a hardship and I need someone to represent me, act as an advocate on my behalf. Whoop, that's where First Home Alliance comes into play. We will act as an advocate on your behalf to speak with your servicer to try and get you in a more sustainable situation. But the main thing is we want to make sure that you prevent, that we help prevent foreclosure and we protect your asset. So that's loss mitigation. We provide rental counseling. We want to help you avoid eviction. In our world, eviction is it's like death. We definitely don't want to see anyone experience eviction. So we act again as an advocate, talking to that landlord and trying to come to a resolution to help you get back on track. Budget debt and budget management, along with emergency preparedness services and reverse mortgage. All right. We also offer reverse mortgage counseling. And so, where are these services offered? We are in Virginia, Maryland, as well as the south side of Chicago, but we're virtual. So that means wherever you are, we can assist. We want you to stay tuned to the end of our conversation so you can find out how you can receive these services. If anything that I went over piqued your interest. Larry, back to you.
All right, Charlene, thank you. Thanks to our audience. And as you're following, of course, you have the comments there. Please put your comments in the chat, and we'll bring those things up. And you may have to give it maybe a couple of times because it's a little difficult for me to watch all those, but I would try to keep up with those and bring those questions in to present them to Song. And of course, if you don't get a chance to pop your question in there, comment tonight, if you're watching the replay, go ahead and send that information in to us. And you can easily get your questions answered by sending a message to help@firsthomealliance.org. All right, we're going to go ahead and get started tonight. And Song, welcome back.
Oh, good evening.
Good evening. Yes, yes. And so how things going for you this week?
It was great. After after last Thursday session is a Friday, right? Friday,
Yes.
between those two Fridays, I've been in Canada and New York.
Wow. Yeah, and you're it's a road trip this time, right?
Then I jumped on the bus, tour bus, and then I went
Okay.
to the Niagara Falls and Montreal and Quebec and New York and came back. So
Yes. Well, that's great.
keep them busy,
Niagara.
busybody. Yeah.
Yes, yes. And so one of these days I'll get to that to be able to travel a little bit more. But yes. And so enjoying the life. And so we're talking about our seniors this month. And
Yeah.
so and then we did get a few inquiries. And so there's of course they asked a lot of questions. And one of the things man, I don't mind too much for the seniors to ask a whole lot more questions than some of the others when they're moving forward with this transaction. And
Sure.
so they do question quite a bit. They inquiry quite a bit, and in reference to getting their packets in as well,
Mhm.
because we're doing mostly everything virtual. So to let them know that it's okay for them to mail the packages in if they do not have electronic means for that. Can you give us a recap, just a recap, bring us up to speed, maybe on what some of the items you talked about on last Thursday, if they missed our conversation?
I think last week we did covered a counseling mandates, right? Requirements for the reverse mortgages, because that is a very important that whoever consider doing reverse mortgages, it is very critical for them to well educated so they can make a sound decisions, right? If they reverse mortgage is really fit for their needs or not. If they are not educated, and if they don't understand the programs, I'm sure they can pushed by other interesting parties so they can do that. But it is hard to go back and say, okay, I don't want to do it because it costs a lot of money to obtain it. So we did talk about counseling mandates, and then we
Hmm.
also talk about financial statements, why we require for them to provide us with the financial statements for let us know what kind of income, expenses, or assets and liabilities they have. There is a new requirement from HUD since 2015 that a lot of us seniors, they used up their available equity upfront, and then at the end of it, I mean, after a few years, it really, they starting to get in trouble where they do not have enough funds to pay for their tax and insurance, and then homeowners insurance. So they start to default on their property taxes and other things. So, and the reverse mortgages also can be foreclosable. So if they don't do their responsibilities, like paying those taxes and insurance and maintaining their property, and government can foreclose on their property. So the government wanted to make sure they have enough, liquidable money outside of reverse mortgage funds to pay for their property tax and insurance as long as they live in there. So that's why financial review was mandated. And then we also talk about pros cons. You know, it's reverse mortgages for the good points and bad points. We did cover, right? So reverse mortgage, I think the best part of the feature of the reverse mortgage for the pros benefit is that even if you don't have any equity on the property, or even though it is a negative equity, you still own the property, you still live in there, as long as you do feel require the responsibilities with you, with your program, and nobody can ask you to move out or to leave, right? So it's
Yes.
your home until you die. So there is a huge benefit on the reverse mortgages, because in regular mortgages or home equity loans, if you skip the 2, 3 payments or four, foreclosure starts, or they send you notification. And then reverse mortgage, you don't have any payments until you sell the property or until you die. So it is a huge benefit of reverse mortgage. But of course, a negative side of a con side of it too, right? So if you want to leave money to your children, if you want to leave your house to your children or your beneficiaries, and it depends on how long you live, you may not have equity left to give to your heirs. So that is also downside. But some people think a cost of obtaining reverse mortgage is very expensive, but I think that it is almost exactly same as anybody who gets FHA mortgage to buy home or refinance their current mortgages. Reason that it's expensive is there's upfront mortgage insurance for the government, and that is what is adding to the cost. But if you have obtained a reverse mortgage early enough, if you keep it for instead of 1-2 years and you pass away or sell it, if you keep the reverse mortgage for 5, 10, 15, 20, 30 years, the cost spreads. So it is not that expensive as you think. So we talk about that. And then we also covered one is a reverse mortgage coming in due, closing, or pay back the mortgage that you use. Is that where there's a few what is it called? Few scenarios where your mortgage is coming in due. It's number one, if you sell the property, or if you pass away, if you both owners die, or if you move out of your home, then going into the nursing homes, or or if you rent out your property and move out to somewhere else and things like that, or if you don't make a payment on your property taxes, or if you don't maintain property, it can be coming due and payable. We didn't go details on the refinance. We did cover some why people consider refinance, right? So that's when the property appreciated very much and there's a lot of equity sitting in there, or interest rate went down so far, you might able to take advantage of that. Or if you need more funds, but there is the available funds if you do refinance it, and you can consider reverse mortgage refinance. So refinance option is available, but we also talk about instead of refinance it, if your concern is mortgage rates, or if your concern is you like to have a line of credit instead of a fixed reverse mortgages and things like that, you can always switch your product from one to another with a very minimum cost of about $20. So before you consider refinance by paying all those costs again, you can talk to your servicer and then ask that, tell them what you want and see if it's possible. And then if a service can just switch the product by paying only $20. So we did talk about that too, I think. Do I miss anything?
You can't run out. You didn't take, yes. It's something, I think you covered, that was a very good summary on that. I just want to
I talk too fast?
Yeah, I want to just slow it down, break it up a little bit.
Okay.
So digest it a little bit, and probably to the audience that help also in some of those scenarios, if we talk more about a scenario. And I do know after, I don't know what part of your discussion last week that grabbed someone that had recently closed on a reverse mortgage. And so what happens, or have you been aware of anyone that have remorse? Basically, they would like to know, I no longer want the reverse mortgage, and they would like to exit out of that. Have you experienced anything of that sort?
Only that remorse, I guess, is really not a happy story that I have. Is they waited so long because often people think that reverse mortgage is the last resource to do the access to their money in the savings, right? So they wait until really last minute, and they need to cover medical bills or nursing homes. So they spend, I mean, it depends on how your property is valued, and higher the property value, it costs higher. So then they pay, quite a bit of money, and they just did reverse mortgages, and then just within a few months that homeowner passed away. So basically they spend all their money, but they haven't really used much because the homeowner died, right? So
Yeah.
because they wait until homeowners becoming late 80s or even 90s. So that's the kind of one of the sad stories, and they cannot reverse that. Cost is already done, and then they just have to pay back and what they owe. From property they sold, or somebody maybe purchased, or family members maybe refinanced their reverse mortgage. But that's the one of the experience I have. But people who got the reverse mortgage, I didn't have a real experience from it, but if they had a good education
Right.
and if they made a sound decisions, and I don't have any experience of somebody who had it and then just turn around and canceled.
Yes.
They
Yeah.
can always cancel before closing. And
Yeah.
then after closing, they have 3 days of a call rescission period, because
Yes.
the reverse mortgage is a refinance. We
Okay.
consider it a refinance. So after they sign the closing documents, they do have 3 days to think about it, and they can say, okay, I don't want it anymore, and it won't cost you any money. However, yes, I don't have any experience of who backed off or wanted to close after they closed it.
Yeah, or okay, to write a rescission. Yes, and
Yeah.
so with moving that, and of course we're speaking some seniors, and I've seen now. We were out this weekend for the Memorial Day weekend, and I work at the American Legion, and so I'm around quite a bit of seniors. It's amazing that these guys, most of them retired 2 and 3 times, so it's a lot of seniors. But but none of the ones that I personally know that are in a situation where they would want to entertain that. But I did let them know, because they can, and they're watching. Matter of fact, one of our seniors, if I'm not going to call your name, but if you're out there watching, you let me know that you was enjoying the Thursday night series. Let's pop in and put your name in the chat. I'll say your name. But this senior is over 85 years old. I'll say that.
Wow.
Matter of fact, right between 85 and 90. And so, he's let us know that he was watching the Thriving Thursday Live and really enjoy the information. And he's able to share even with junior individuals that's junior to him. And so with moving towards this, when they're moving in that direction, we know that this is a way of supplementing income, because Social Security, and some not fortunate to have a double retirement, such as Social Security retirement, or industry retirement, or military retirement, like some of the guys, they may only have Social Security, and then so they need something to supplement that.
Yeah.
When they're moving in that direction, what are some of the things about the mindset that you could speak on in reference to some of the seniors that may want to start thinking about when they're moving in that direction?
So, well, it's a mindset is that it's a perception of a long history of a reverse mortgage. People think that reverse mortgage, if you do reverse mortgage, that you're either poor or cash poor. So often people, when they do the refinance to get the cash out, they don't feel it's ashamed because they take out the equity on that, right? Refinance to cash out. But however, when they do the reverse mortgage, a lot of people, older than us, thinks it's a shame because they don't want to tell the people, and they're doing reverse. And I ask them why. It's just a refinance. It's another refinance for you to access to your savings in your property instead of in the bank, to improve your cash flow, right? So that's just something that people need to understand. It's nothing different than refinancing and then cashing out the equity to spend, or getting regular home equity line to access the funds on there. So that's just the mindset that I need to. This our job to really educate them. It's nothing to be ashamed of. But these days, reverse mortgage is not just for the cash supplement for their monthly living. It's oftentimes it is used for their retirement planning. So often people have access to bank account, but a lot of money is tied up in the CDs or bonds or stocks, right? And when they need some lump sum, and it might not be a good time to sell them. So if you, instead of having a regular home equity line of credit, which is less cost obtaining, but you have annual fees on the home equity line of credit, and then you do have to make a monthly payment if you borrow, right? But reverse mortgage, you can make it a line of credit and then just let it sit there and then let it grow for available funds, because the funds will be grow every month, right? So your accessible funds are increasing on the reverse mortgage line of credit, and there's no annual fees. So closing costs you paid, if you have a cash, you can pay down. And the reverse mortgage, any balance on that account, well, program it says you don't have to make a monthly payments, but you are allowed to make a payments as you have extra cash. And if you don't want to have your balance to grow, or if you don't want to pay interest, you can always pay down. Don't pay it off though, because if you pay it off to zero balance, your reverse mortgage account will close. So even the line of credit, you gotta keep the maybe $50 in there, and $50 for insurance and interest will be like maybe just a few cents per year, right? So then you can still continuously keep your line of credit and let it grow, and then you can access to that when you need it, and then you can just keep it safe, your money in the stocks and CDs and whatever. You don't have to break it. So it is used for retirement planning, financial planning product. So nowadays, a lot of people do that too. So it's not just for the income supplements, but it's a part of your retirement planning. And then also, as you know, they use that for purchase home too, right? So people, when they buy house, either upgrade or downgrade. If you need a little more funds to either you upgrade your house or you downsize, and use a reverse mortgage to purchase. So if you do so, then you only pay one closing cost when you buy the home,
right?
For the settlement. So you don't have to do another settlement for refinance later on. So I really suggest, if people who has equity, if they sold the house, if they want to have up or downsize their property, consider reverse mortgage to have a line of credit available. And so your retirement planning when you purchase the home, not after. So you save a lot of money on the closing cost. So that is kind of some other mindset. It is not just for the poor, cash poor.
Yes. Okay. And have you had a situation lately, and if you have insight in reference to what a person went through or what they was experiencing, maybe a story of someone that actually used it for purchase?
Purchase home?
Yes, to purchase a home. Basically.
Yes, as you know, that people, when they go through counseling session, they normally don't come back to counselor. They're working with the lenders, so it's probably very good, probably topic for the lenders. But I know some people use the reverse mortgage to purchase the home, and then they have really they can, for example, when they sold the house, and they cash out $400,000 after they sold the house, but then they want to buy next house a little smaller, or whatever. And then instead of all $400,000 cash to buy down payment for their new house, they can only put $200,000, and then they have $20,000 accessible liquidable cash in their bank. So they can still have a home. They have their home without making monthly payments. They have a new house with their access to another $20,000 line of credit. So people who did that, and they were so happy, they knew it was existing before they bought it. Because if not, they bought house, pay for all the costs, and then they go back again in a year or two, they pay out the whole closing cost to do the refinance with the reverse mortgage, right? So yes, I seen some other clients who's done it through my counseling, but I have not heard any negative things from them after.
Okay. All right. And just the recap in reference to after the loan close, so
Mhm.
this could be a purchase or it could be just a refinance, if you want to call that. What are the ongoing obligations that, after the closing that they have to make sure that they stay on top of?
Right. So they need to make sure because, if you had a no mortgage and you are used to paying your own property tax and homeowners insurance and HOAs and things like that, but if you had a mortgage, if you refinanced with a reverse mortgage, you're not used to paying those separately because you have escrow in your mortgage, right? So
Okay.
often people forget they have to pay property tax and homeowners insurance separately. So then it goes to default and foreclosure. So they need to understand that it is their responsibility to pay those escrow themselves because
Okay.
mortgage companies are not escrowing them because they do not receive a payment from you, right? So that's one of the default reasons. And then you need to make sure that maintain your house to be livable. So you
Okay.
don't have to spend a lot of money to put everything new outside, just to make sure that outside doesn't look like nobody lives there. So, and that's property management is very important. And then another thing is for annually, they will send you a letter to ask you to sign and return letter saying that you're still living there. It's called occupation certification. And then people receive a letter, they ignore it and they don't respond it. Then if they don't receive it, they think you're not living there. And then they're gonna start to ask you that your loan is due because you're not living there.
Yeah.
So that is very important. They need to watch out for that letter once a year and make sure they sign it and return that.
Okay.
Yeah, that
And
is, yeah.
yes, back to the. I know we was talking about the taxes and some of the things are not escrowed, but there shouldn't be. But there may be cases where individuals have that have no mortgage on their property, and they
Yeah.
forego insurance, and so things can happen if you forego insurance. And now they're under a reverse mortgage, and so there's a requirement for insurance? Is that correct?
Oh
For
yeah, of course, because the government's giving you a lot of money, they wanted to make sure that property is insured in case if something happens, it burn down or anything, right? So yeah,
correct.
it is a requirement. So you have to obtain, and then you have to obtain yourself to get it less expensive. If a lender buys it because you keep forgetting to make a payments, or if you cancel it, it's just probably 10 times more expensive.
Okay. Now,
So you
are
have to
there any
put an
options
option and
for
keep.
set aside? Is there any options for set aside to ensure that insurance and taxes are paid?
Yeah, so you can ask for set aside. We call set aside your escrow. But
Mhm.
problem is they'll set aside. For example, if you're an 80, they assuming you're gonna live on to 100. So next 20 years worth, those escrow they holding it. So which means you'll be less accessible to funds that much. So they don't take each month. They hold the whole thing at one side. They don't pay you interest on it. It's just sitting under their escrow account. And then from there, each year, they pay your property tax and insurance. So chunk of big amount of your available funds will be in held. So I really do not recommend. So that's why I recommend they need to have somebody, family member, or whoever they trust, or whoever has a power of attorney, to manage that their finance, so they can do those things. So they can help with those things.
Yes. And so
So
that
they
sound
can
like
have access
that
to
sound
their
like a
funds.
good yeah, sound like a good conversation to have with a family member that is experiencing
Definitely,
that to ensure that taken care of.
yes,
Yes.
definitely,
Yeah.
definitely.
And I think we covered last time in reference to family members. They don't necessarily have to be on the loan, but they can be involved in the counseling and guiding the person through the process.
Yeah.
Yes, super. Now, and again, back to this: when a homeowner passes away, what options do the heirs actually have? What options do the heirs have
Yeah,
if?
heirs have a lot of actually quite a few options. So if there is they can sell the property if they don't want it. If there's equity in the property after they pay back the mortgage balance, of course the equity goes to heir. well, administration will manage that. Or if there's no equity in there, and they have options to just transfer their deed to bank or government, or I heard whoever they have servicing their loans, but they can also sell for the government or servicer, and then these days they get some compensation for doing that. So for instead of bank to hire the realtors to sell the property, they give a heirs opportunity to sell the property. So they can sell the property, or if they want to keep the property, the heir who's over 65, they can also refinance their parents or whoever is reverse mortgage to their name if they are qualified, if they're eligible, or if there's enough equity in there. Or they can refinance their reverse mortgage balance and they can keep the property, so they can get the mortgage from somewhere if they're young, and then refinance the reverse mortgage balance and then pay back. But then if they decide to purchase the property from the bank, if property is still less than, mortgage balance is still less than property, then of course they have to pay back the whole thing. But however, if they're an upside down, if a mortgage balance is much larger than, or even just higher than a property current value, market value, and bank will be, happy with whatever is sold minus all the cost, and then the net sales price, and that's what they're gonna satisfy. So even there's 100,000 shortage after they close the property, bank would not go to the benefit of the heirs for asking for that shortage. So that's why we call it non-recourse. That's what they call it. So which means they only be going after or satisfied with the property, sold the property, but they're not going after their any other assets or even heirs. So and then let me see. Yeah, I guess those are options. But then until now, a lot of heirs, when there's no equity in there, negative equity, they turn over their deed to the bank or government. But nowadays they compensate them. So I think it's been improving. You don't want to, in case that you didn't live with your parents or somebody family member live with them, you're gonna take a time to sell it, right? So government's gonna give them, first 6 months to sell it. So you have a 6 months of living in there. Even the mortgage balance is continuously still growing, right, every month, because there's interest and insurance. But you have a time to sort things out and sell it. And then if you don't sell it within 6 months, you can also ask the government for extended time to sell it, but you got to have a good reason to why you haven't sold within 6 months. So they can extend to another 90 days and 90 days, which means 3 months and 3 months. So, they can give up to maximum 1 year. And after that, it goes to foreclosure if you don't sell it. But, they will give you time to manage your property.
Okay. And the heirs that you list on there, is it in a sequence of heirs, or if it's the group of heirs when it becomes heir property or heir rights?
I guess it's just how they set up. If they set up as a trust, or if their will says how many heirs they have, and whoever administrative, but what's called the representative, right, will take care of it. So yeah, reverse mortgage doesn't go that far for control, whoever does, because it's your house.
Yeah.
How you designate it. But I also want to cover one more thing for after post their death, if there's a spouse. I think last week we didn't really cover that part of it. So when you do the reverse mortgage, that time, if you're married, most people, husband and wife, get into the mortgage, right? So they are in the loan. So they're both covered. So if they pass away, if one passed away and you still own the property, you still have a right to live there until you die. It doesn't matter how much equity is in there, right? So that's when you're married and you're both on the loan. Now,
Okay.
however, some people, they don't want to put another spouse in the loan. I mean, they have some kind of financial reasons, right? So they want to remove their current married spouse out of it in reverse mortgage. So only one spouse is in the mortgage. Now, this spouse can live with a homeowner as long as a homeowner lives in there. However, the spouse who's got dropped off is not a mortgage owner. It's not a homeowner. So therefore, and after spouse passed, they don't have automatic right to stay there. So therefore, this is a new law kicked in just a few years ago, a couple years ago, that now this spouse have to claim, and I think they have within 60 days. When the spouse passes, the homeowner passes, heirs have only 30 days to notify the bank saying that, okay, homeowner passed away. What are my options? But however, those spouse has, I think, up to 60 days. They need to work with the bank, but they need to put themselves on the title.
Okay.
So now they have to add them back to the title. So then they can stay there until they die. But however, they still cannot access to any funds. So their accessibility stopped with the homeowner.
Okay.
So this dropped out spouse, they can add it to the title and they can live there until they die, but they cannot access to any funds available on that account. Now, if this is so that's how it's gonna work. So they have to be very careful when they take out the spouse out of the title and then reverse mortgage, right?
Okay.
Now another scenario is that this homeowner is 70 years old and he was a single, but during in next few years he remarried, and that spouse is not gonna be covered.
The new spouse will not be covered on that have an option to stay once they pass. Is that what you're saying?
Exactly. So they are not in the loan, they are not on the property, and they are not in the deed, right? So if the property owner passes away, this new spouse has no right to live in there, and the mortgage is coming in due. So basically, this spouse has to do either sell or refinance, whatever. And if they don't have any of those options or qualifications on their legal paper, then this spouse has to move out.
Wow.
So people has to know.
Yes,
New
definitely.
spouse is not covered, and then also dropped out spouse has to claim title when the homeowner dies to be stay until they die, but they still have no access to, if they have a line of credit and there's still 100,000 is available, they cannot access the money because the available funds accessibility are stopped.
Okay. And so on that scenario there, when the spouse passes away, you said they had 30 days to notify the lender that the bank.
Any beneficiaries, any heirs needs to notify the lenders that homeowner passed away.
Okay.
And then you can discuss what my other options are and what my relationship is. Then lender will definitely explain to them, if you're a spouse and if you're married a spouse when he had a reverse mortgage, then she needs to add it to the title so she can live there, but there's a time limit.
Okay. There's a time limit. Okay. Mm-hmm. And then in that other scenario you mentioned where the spouse passes away and the other person is now in the house and then they remarry. And so and then if that individual passes, it's the same situation. You get 30 days to notify the bank that he passed. Now, will they give any grace period for that person to move out? Do you know?
Yes. They don't really just kick you out.
Right.
Seniors. This is a senior program, so they really, as I told you, they give you first 6 months to sell or refinance or buy it. They normally give you first 6 months to do things. So
yes. Where seniors, they're a lot of course they're all living. We are all living longer than the last generation, it seems.
Yeah.
And so it takes a little while when you're on a fixed income, to adjust those, if you want to call it sticker shock or adjustment in your budget. And so, whereas when you were working, you may be able to come up with excess money in 30 days. As a senior, it may take you 90 to 120 days to come up with that extra leeway in your budget to make those adjustments. So that is great. And so I guess if you're dealing with seniors, that's probably because there are seniors now that have went through divorces or going through divorces. Now I know of a senior that may be getting that may be going through, and of course after someone passed. So that's a lot of questions that you should be asking before when you're going into a relationship when there's a house involved. To know if there's a mortgage, and then if it's a regular mortgage, is it paid off? If it's a reverse mortgage, it may be a good question to come up in that process when you start thinking about moving in with someone and a long-term relationship. Because yes, that is super.
There's a lot of legal issues and paperwork when somebody want to do reverse mortgage, and let's just say husband owns a property, wants to do the reverse mortgage, but he has a wife. But then they leave it separately. And then, of course, the spouse it needs to be considered in the reverse mortgage because they are not really divorced. They're just living separate and, just separate, right? So we have those cases too. Their wife has to sign off on some, and then their wife has to. We would strongly recommend that wives to involve with the counseling. So, she has to understand what kind of rights she has. So, when you have a client who asking for a reverse mortgage counseling, you should ask if they're currently married or separated or single, or is processing of separating, whatever, who's in the title. And so we know who needs to be in the counseling. And especially when they use power of attorneys or trust, it's a very important thing to ask upfront because there is some different requirements, right? Make sure that power of attorney was done, not 20 years ago, and then bank may want to have recertify that power of attorneys are still good. If the clients now already been they're not cognizant enough anymore. But then somebody's trying to use a power of attorney from 20 years ago. And then bank might want it updated. And then also trust also, what kind of title is in there. And it all depends on requirements different for the counseling. So
yes, and I think it came up in the earlier session, and I think we have had some estate planners that have came on as well, advising individuals that this should be an annual review, on your, the will, trust, real estate documents and things of that sort. So I think that is good for our audience to know that an annual review on that would be great. With that, we have a lot of the earlier generation. They purchase a home and then you ask them for their copy of the closing documents of the HUD-1, and they have already moved, displaced, and they can't find it. And so what is something you can suggest to our seniors in reference to keeping track of their mortgage documents?
Well, number one, if they like to have a paper documents, I really strongly recommend them having safe box, either in their house or in the bank, because bank safe box is not that expensive. I have one of the largest safe box in the Capital One. It's only about $180 per year. It's a huge one, but most people don't need that big one. So it's the number one, I guess. And then number two, if they are be able to do that and scan them, what's called, make sure you save on, somewhere hardware or USBs, and then keep the USB into the somewhere safe box they have. So and then they should be able to access it. And then if they do have a safe box, make sure they have another person who access to it, and then that person has a key to get in. And I have some other clients, they wanted to keep all the things on the safety and safe box in the bank. And then they want to keep the second key into the safe place.
Oh, I thought you was going
Yeah.
to
So where they put in the extra
don't
key?
put that second key inside the safe box. Okay, that's what I thought you was
Yeah,
going to say.
inside safe box.
Some
So when
people
they,
put the second key
so when,
inside. Like, what are you
yeah,
doing?
so when they lost their key, guess what? They cannot get in. So bank has to call the
Yes,
locksmith, what's called locksmith, to come in
yes,
and break that safe
yes.
box. It costs them a few $100s. So they
Yes.
need to make sure that somebody else has access to their safe box.
True. We're probably last year at our annual event, we didn't print the hard copy of the journal that we normally get, the souvenir journal. We
Yeah,
gave out. I can't find my blue one right here. What it
yeah,
was branded, and so we actually saw one of the insurance individuals that
yeah,
had this they was putting these things out, and they had a one on there for your wills. It was already
yeah.
pre-programmed with a folder.
Mhm.
And so I
Yeah,
recommend, if you get one at the end of the year, if you get whatever, this is something that you can actually put a copy and put this inside your safe box.
yeah.
Once you secure the document, so you can have a hard copy if you like in there, and then put an electronic copy there and put this inside your safe box. That's ideal.
Yeah,
Okay.
but unfortunately, some of the places for the like wedding certifications or wills, they
Yeah.
won't have some original. So it
Yeah.
is necessary for them to keep the original. But then, HUD one like a housing settlement documents, you can have electronic copies. So
Yeah.
you can either do that or put them in the safe box.
Yes, and I highly recommend. We went through individuals that have had burned, the houses are burned out. So if you're keeping it at your home, the little black box, you can get them black. They're sort of heavy duty, and they'll handle a little bit of explosion, but definitely they are fireproof. And
Yeah,
so get one of those, and whether you get one or you lock it or not, it's at least fireproof.
yeah,
But you can get a lock, and so that is definitely recommended to do that.
yeah, yeah.
Great. Yes. And so with that, just a warning about
Well, if you before you go further, if you have some other questions from people who listened, shoot me with any questions that you might have or they might have.
okay. All right. Now yes, I sure will. And so what are some of the things they should look out for in reference to scams?
For the scamming?
People, those phone calls. I get the phone call. 62 years old. They know that you're a senior now, and
Yeah.
so are they able to check court documents to find out if there's a reverse mortgage on a homeowner?
Well, reverse mortgage, let me see. Yes, because reverse mortgage is a refinance. So though there are settlement documents, these are recorded in the county. So there is a county record has the mortgage.
Okay.
And then you can get a copy from them deed and if you want to. And then I guess really and if they don't have any documents, I don't know, they should receive monthly statements. So, out of all those, every month or every 6 months, they get a mortgage statement. They should have kept the one copy. And if you haven't saved the settlement documents, that's the reason that banks are sending statements to remind them how much their balances went up or what taxes are due or things like that. Just like for the mortgages, they do receive mortgage statements each month.
Okay.
Yeah,
Okay.
but it's definitely county record has their deed.
Yes. Okay. And so I know one of the searches that some of the investors and probably a attorney offices check, they send individuals to check those records for absentee owners and things of that sort. So there's certain codes that shows up that on some of the records or recordings that you may be sorted out to be scammed. And so seniors, I think it could be what you consider a soft target to reach out and try to finagle with spam mail and things of that sort because of being in that reverse mortgage situation. So look out for that.
Yeah.
Yes. Okay. Song, is any last thing that you would like to give to our audience in reference to our reverse mortgage?
Yeah. So and if anybody's an age, of course, 65 and older for the HICM, HUD product is a FHA mortgage. And I would just, as I said last time, I want to repeat that same thing, that you look at your finances for the long term. See, eventually, if you think that you're gonna need it to access your home equity, then consider the reverse mortgage in early time of your age instead of wait until last minute, because the last minute is really for short term, use, which means the cost will be more expensive. So make it earlier and have the line of credit if you don't need the money now, and just let it grow so you have a lot more larger amount of accessibility for your line of credit, and then use it as your retirement planning, your financial planning instead of last resource of cash supplements. And then don't listen to your friends or neighbors or whoever who has some information in the reverse mortgage, because they will all give you really 80-90% wrong information. So make sure you talk to a well-experienced reverse mortgage loan originator, not any mortgage originator, because a lot of people may not have a lot of knowledge, and they might have the same knowledge as you have, right? So looking for somebody who's been done reverse mortgage for many years, and they only do reverse mortgages, they may not do regular mortgages, and they are the real true expertise, and they are very well educated in the reverse mortgage. And then those people don't chase for seniors for the just generating loans. Their number one priority is really educating them, and then make sure they make right decisions. So make sure that you talk to experienced experts. Don't listen to neighbors and friends and family members, because they'll all give you their own whatever knowledge they have, right? Even somebody who has a reverse mortgage, I can tell you, they forgot 80% of what they learned. Some people don't even remember they had a reverse mortgage.
Right.
So, don't just trust on that, whatever information you're getting from other person who has a reverse mortgage. So
Yes.
that's my last advice.
Okay. Yes, and thanks. And so, yes, First Home Alliance, will HUD approved housing agency. Of course, you can check out our website. That's firsthomealliance.org. But we have an updated list of referrals in reference to those loan officers. So it's updated. Those guys are active. I say guys, but the loan officers that are active in the field. And our reverse mortgage counselor, and we have a few that across the country that do the HECM. There, it's required that they are not only just trained and keeping up with continuing education and awareness, but they are retested. Is it every 3 years, every 2 years?
Yeah, re-licensing every 3 years.
Relicense every 3 years. So
And between then, we have a continuing education every month, every year.
Yes. Yes. And so that's why our expert, Song, on the council, she's able to very well versed on all the ins and out and time limits and things that you need to ensure that she's given the best possible breakdown and option for you when you come in for the counseling. And so, of course, again, you can get in contact with us if you're interested. We'll make sure that you get the proper referral for the loan officer and ensure that you have the proper documents before coming in to talk to the counselor. And that and it is a season. And so someone who knows someone that is interested, please contact us. And we are on the aware. We're putting out the awareness, but we're outreaching for those that are interested to make sure that you come to a certified and a credible organization before going forward with that. So let them know the process is here and available, and we're here to make that service. All right. I want to say thank you, Song. And before we leave, thank you. And of course, we're going to have you back in due time. But definitely be on the lookout. We hope we will be getting some responses from this outreach here. And so be on the lookout for, ensuring that you share your calendar with us.
Okay.
Yeah. And enjoy your travel.
Thank you, guys.
Yeah. Well, thank you. And Charlene, go ahead and give us our announcements.
All right, guys. Upcoming events, we have our first time homebuyers class, which is going to be June 20th at the McCourt Building located in Woodbridge. Again, that's June 20th. There's still some seats available. Please visit our website at www.firsthomealliance.org to register. And then, as always, we have our annual awards gala. And if I'm correct, it's November 8th this year.
14th.
14th. Okay, so November 14th. Sorry, y'all. I'm getting older. My body ain't working right. It's not. November 14th, and that's going to be located in Woodbridge this year. Is that correct?
That's correct.
All right, so I did get that right. So it will be.
I do what I don't forgot what you call it for. I'm trying to remember more, but I went ahead and associated the 14th with the 14th of February, which is Valentine's Day, right?
Okay.
But the next Super Bowl is on February 14th as well.
It is.
Yes.
Oh, okay.
So
right.
remember all that, the 14th, the 14th, the 14th. Something's got to happen on the 14th of December, the 14th of January, but we got the 14th of November and
14th. Okay. I will associate it with February 14th, so I will remember moving forward. So that is going to be our annual awards gala this year. The theme is.
I got it up there.
I see it, and I look, y'all, help me. I'm the one who came up with it.
I'm gonna put it up. I'm gonna take a picture. I'm gonna put my suit on and take a picture. Then I'll take it down. But
Winter Wonderland.
It's called Bling Blings, no?
So this year the theme is Winter Wonderland. Again, November 14th. Please put it on your calendar. It's just a great night to come out and support the organization, support the community. Again, November 14th. Put it on your calendar now. For those of you who are interested in showcasing your business, sponsorships is available. Put that on your calendar to talk to us about some upcoming, sponsorship, how you can showcase your business. But again, it's a great night to support our community. I always say partying with a purpose, because we do get down. We do have a good time. It's not one of those events where you're going to fall asleep. I promise you. You will not be falling asleep. And so please put that on the calendar. We look forward to hopefully seeing you there. And again, our first time homebuyers class is going to be June 20th at the McCourt building located in Woodbridge. Larry?
All right. Thanks, everyone. Continue to follow us on social media and check out our website. That's at firsthomealliance.org. And again, thank you for joining us here on a Thriving Thursday. And we'll see you next time.
Thank you, guys. Good night.
All right. Thank you, Sam.
Good night.
Good night.